Yesterday, the NSE 20 edging up just 0.2%, but volume surging. Was that buoyed by more trading in Safaricom after the government says that it wants to talk to various telecoms players about their regulation change?
Yeah, that's true. We've been having a lot of trades, and we think we'll also see a lot more trades coming through Safaricom today. We've been seeing foreigners trading across, foreigners buying, others selling. We're expecting results for Safaricom coming through towards the end of this month. And there's still quite a bit of demand from the local investors, but that supply has been quite significant. And obviously, in terms of regulations, the market has been expecting it. Only that the scale of it has caused some jitteriness in the market, and obviously we've seen other markets introducing such forms of legislation in order to curb the dominant players. But obviously we expect them to be reasonable so that they do not stifle innovation and competition.
Mm-hmm. I wanted to move on to another sector, which is the tea and coffee players. The biggest gainer yesterday, of course, was Williamson Tea, which is up 7.9%. Improved weather conditions and rising tea and coffee prices on the international front, boosting profitability of these agri-stocks on the NSE. Can we see further increases over the next 6 months?
Yes, certainly. In fact, we've had comments from the Kenya Tea Development Authority, which actually estimates that, you know, even though production is increasing quite substantially, we'll not see a fall in price. And these prices were actually actually rose at a time when we had production reducing quite substantially. But now we've seen Williamson Tea and quite a number of the other tea companies, and Williamson Tea has also the Captura Tea Company, which is an associate of it. And all these tea companies are expected to perform well throughout the year. Obviously, we need to see more value addition coming through, but it appears very likely that they are going to do very well for the rest of the year.
Mm-hmm. Bamburi Cement, also one of yesterday's big gainers, but today we're seeing that report out that East Africa's cement producers are pushing for higher tariffs, and there are concerns that this might impact other industries, like perhaps the tea industry, where Pakistan is a major trading partner with Kenya. Could that not be a threat on the tea players?
Yeah, I mean, I suspect attempts probably to initiate sort of a trade war between Kenya and Pakistan would be a big problem, especially in terms of the tea exports. But I think the decision by Pakistan to assist their cement producers is actually quite a fair argument on the part of Kenya. If you look at the East African cement producers, they've been increasing capacity, and so you can understand their worry if a country is subsidizing transport into the region, because that 25% subsidy, it was making, you know, it was balancing out the entire demand and supply situation between imported cement and locally produced cement. But now with the Pakistan opting to subsidize their producers, then we'll probably see the local producers starting to hurt, especially on the back of higher capacities that have been put up.
I was speaking to Ati River Mining a couple of months ago, and they were saying that because of the issues that they've got, for instance, with power, they've had to improve efficiencies in other areas. Would a move like this not perhaps make the local industry more competitive and to focus more on making their businesses more efficiently produced?
Well, yes, to a certain extent, but it's not sufficient. I mean, we've had Kenya Power and Lighting and KenGen, basically the two industry players. They've announced that electricity costs are going to come down. But I don't know whether that's going to be sufficient to really make the East African cement producers competitive against imported cement. Obviously, we need to look at other components, but electricity is really the biggest of them all. And as long as the electricity costs remain relatively high compared to other countries, then it would be difficult for the local cement producers, even when efficient, actually to compete with imported cement.
And we did see some positive news yesterday with regards to electricity generation. KenGen, we saw more interest in that stock based on the fact that they plan to increase their Masinga Dam capacity. Just talk us through that.
Yeah, that's true. Actually, investors are counting on two things. The ability of KenGen to deliver to KPLC the promised capacity, and then also there is a capacity charge. So as KenGen increases capacity, the tariff that KPLC has to pay, it also goes up. So for KenGen, that's a very positive move, and that's why we are seeing investors moving through to that stock. And obviously the long rains have done quite well for KenGen, because now they're able to produce power from hydroelectricity, which is the cheapest source that they have at this point. And they're actually planning to increase capacity in Masinga Dam, and all these are playing out quite positively for the company.